Gold, the investment class of modern society that is the most hated. The category of investing which most people will look at the investors and be like, huh, those are the tin hat people of the investing world. But why is it something so shiny, rare, and valuable, virtually admitted by everybody, such a hated asset class? Are stocks better, or is gold better? Let's explore in today's video. Now, this is a fake piece of gold, so don't be coming into my house expecting to find any real gold, because you won't find any here. Now let's look at the advantages and disadvantages of investing in gold. First advantage is we can do something called cycle investing. Now that is buying at the lows and selling at the highs. It's common sense really, so let's look at a real life example. So back in August 28th, 1 ounce of gold was worth $1,900. That was the spot price that you could buy it at. Now, if you sold that for $1,900, that was also the same day that Tesla split 5-to-1 for $500 a share. So you could have bought roughly 4 shares of Tesla for 1 ounce of gold. Now, this is how cycle investing works. You take your money from your gold and you move into another asset class such as stocks. Now, if you let that Tesla stock ride out, you could have sold at the high, turning your $1,900, depending on what time you sold, into more money at that point. So as of the time of this recording, Tesla is worth around $700 per share. So if you sold right now, you would have turned your $1,900 worth of gold into roughly $2,800 worth of stock. So if you want to do this with other types of stock, maybe Tesla's too expensive for you. Well, how about we look at something that's cheaper? Well, if you want to do that, then you want to search for companies with different PE ratios. If you find a PE ratio between 1 and 10, that's fantastic. That means that that stock, depending on the company, depending on the leadership, depending on the niche of the industry, has so much potential to grow. It's undervalued because it's under 10. Anything between 15 and 20, that's potentially average value that you're gonna find a lot of these companies at. That is a good PE ratio to find. Anything over 20, however, that PE ratio means that the company is overvalued. Tesla, however, is its own beast. A lot of these tech companies don't follow these traditional investing rules of PE ratios. So take everything with a grain of salt when you're looking at these companies, when you're considering doing cycle investing. So now let's look at the disadvantages of gold. Now, number one, gold doesn't cash flow. That means that when you buy it, it kind of just sits there, looks shiny in a vault, and you don't really do anything with it. It doesn't bring any consistent income into your pocket. Now, the second disadvantage of gold is all about opportunity cost. You could be taking your money and putting it into something safe such as gold, but also now you're taking away your ability of having that cash and investing in something that will cash flow. So you are putting it into something safe, but because of that, your returns are going to be lower. You are mainly just retaining your value in what you're investing in. Now, there is a disclaimer when you're investing in gold as well, is that when the American dollar is doing very well, the price of gold will drop. Like how I mentioned back on August 28th, the spot price was around $1,900. Well, now during the time of the recording of this video, it has dropped to about $1,700 because of how much money is being dumped into the economy. So that is something to take into consideration when you're investing, because the more that the dollar is doing successfully, the less people are going to be using gold as an asset class. So guys, if you want to invest in gold, I really highly recommend you do your research, look into a few different articles, see what's going on in the world that could affect the prices of gold, and talk to a professional. Seek out for advice. Do your research before you dump your money into it, because it's a lot of money and there are disadvantages as much as there are advantages as long as you know what you're doing. It is a safer investment than most things, but still I recommend you doing your 20 to 30 hours of research before you buy your first ounce of gold. So to answer my question from the beginning of the video, it's not really a yes or no question, what's better, stocks or gold? The intelligent investor would tell you that both of them together at the right time is the perfect duo. I'm not going to tell you to go out and rush and buy gold, but I will tell you that hedging your bets is one of the best things that you can do as an investor. If you don't want to go all in an asset class, having 5% of your net worth in precious metals is a good idea to have. That is what the average entrepreneur, I was advised, should have into precious metals. So guys, that was my quick analysis on investing in gold. I hope you find that beneficial. If you have any questions, please reach out, and also seek advice from a professional. They are there to help you. So with that said, I'll see you guys in the next episode. Bye. Enjoyed the content, but you're not subscribed yet? Make sure you subscribe down below, hit the notification bell so you can get information when the latest videos are dropping each week. Thanks.